Good evening, everyone. Welcome after a long time for my session. The last session we had was way back in the month of January, I guess. December or January was one of the previous session what I had taken. I hope all of your preparation is going along fine, and I hope all of you are getting ready to face the examination. We had a very good result in the CA final examinations for November 2021. I see a lot of candidates passed out, and so I hope the persons for whom Group 2 is left out are also doing the adequate preparation so that to crack the exam in May 2022. So I hope everyone, before we do this class, now by this time you should be having proper knowledge, and you should be having a good conceptual understanding in the GST subject, because today we are going to see some critical amendments which has been covered by the CA Institute. The CA Institute has released a statutory update booklet which talks about the various changes which has happened, various notifications which has happened for the purpose of the May 2022 attempt. So here we'll be focusing only on the changes, only on the updates which has been given by the CA Institute in the booklet which is released. So we'll be looking at that, and post that we will also start solving some of the MCQ case scenario based MCQs. That is, there is a case scenario based on that the MCQ is asked, wherein a number of topics in each question will be covered. So we shall do some working on that as well. So that is the agenda for today's class. So feel free to keep queries. I got a few queries via email. I had responded to some of them. If some of them are pending, I think I'll be responding to them soon as well. It's very much in my to-do list, so I will respond to those particular doubts as well. So keep sending me your queries so that I can help you in your preparation, because it is natural that you may have queries whenever it comes to when you're doing the problems, when you're revising the syllabus. That is the time wherein the queries keep coming in, and at that point of time you will have to make sure that you please send me your queries, and I can definitely help you in solving the same. Now, going forward, let us look at the various changes which has happened. First, we shall cover the exemptions related topic, wherein particular exemptions, mild modifications has been made, and also some new exemptions has been introduced, right? This is what is happening with regard to the exemptions chapter. So the first point what we will see here, if you all remember, in the exemptions chapter, transportation of goods by the aircraft from custom station clearance in India to a place outside India, right? So wherever there is a transportation of goods, right, by an aircraft from custom station of clearance, so wherever it is getting cleared in India from a place outside India, whoever is the person who is providing the transportation service of goods by the aircraft is exempt from GST. Now, this particular exemption was there at that point of time, but now a time limit has been fixed. It says that the exemption is applicable only up to 30th September 2022. This is what is the line which has been added to the existing exemption. So therefore, this particular exemption is applicable up to 30th September 2022. The same exemption, the time limit till 30th September 2022 has been extended with regard to a vessel as well. That is transportation of goods by way of a vessel from the custom station clearance to a place outside India. A vessel is basically a ship which is traveling in the sea, in the oceans. So that also is covered. This exemption also will be applicable up to 30th September 2022. Then another amendment which has happened is basically a training program. So when you're providing any services to the central government, when you're providing any services to the state government, union territory administration under any particular training program. So if you're doing any training program for which 75% or more of the total expenditure is borne by the central government. So this is a more important point which you have to remember. So where 75% or more of the total expenditure, this 75% or more was not there before. Earlier, it was just services which are provided to the central government under any training program, as simple as that. But here, this word 75% or more, that is there has been a limit which has been set for the expenditure which is undertaken by the central government. So therefore, in case you're providing any services with regard to any training program, okay, when you're providing any services with regard to any training program for which 75% or more of the total expenditure is borne by the central government, state government, union territory administration, this also is exempt from GST. So these are some of the changes which are made in the exemptions related topic. So this you have to remember. Then also there is a new exemption which has been introduced, wherein the service of giving a national permit to a goods carriage. So therefore, if you are granting the national permit, what is a national permit? Basically, the permission to operate the transportation of goods throughout the country. So that is your national permit. That is the services which are provided with regard to that one. So this is a new exemption which is introduced. So if the government provides a service of granting a national permit to the goods carriage to operate throughout the country, in that particular situation, it is a new exemption and such particular supply is exempt from GST. Then also existing exemption, some of the exemptions have been withdrawn. So what has been withdrawn? So what happens is there are certain assets which are owned by the Indian Railways Finance Corporation. Indian Railways Finance Corporation basically leases out the asset to the Indian Railways. It owns your wagons, coaches, locos, etc., which the Indian Railway Finance Corporation, that is IRFC, it leases it out to the Indian Railways. So this was an exemption which was provided, but this particular exemption now has been withdrawn. So therefore, this is no longer exempt. So a service of leasing of the assets by the IRFC to the Indian Railways is no more applicable. So therefore, this shall be taxable. So these are some of the important exemptions which have been given, important changes which have been given. Please note, so there are some other circulars also which has been introduced. All that we had covered when we covered the exemptions chapter. Only which were not covered and which is after the issuance of the study material, where some of the updates has been given, that will be covered in today's statutory update related class. Just give me 1 second. Yeah, now we come to the next change which has happened in the place of supply related provisions. Place of supply with regard to B2B MRO services. When I say MRO here, it is maintenance, repair, and overhaul services. So if you are providing the services in a B2B manner, that is business to manner, if you're providing the services to another business, how shall the place of supply be determined is what is covered in this particular provision. So here, section 13 of the IGST, if you had covered the place of supply provisions, you should be knowing that section 12 and section 13 of the IGST Act are most critical when it comes to understanding the place of provisions in the GST law. So therefore here, section 13 of the IGST Act, it determines the place of supply of services where the location of supplier or the location of recipient is outside India. So first of all, what does section 13 do? Section 13 talks about place of supply, wherein either the location of the supplier or the location of the recipient, either the location of the supplier or the location of the recipient, if it is located outside India, then your section 13 is applicable. So therefore here what happens, wherever the double taxation, there are chances that a double taxation may occur, or there are chances that a supply of service may not be taxed. This subsection 13 empowers the government to notify any service for which the place of supply shall be the place of effective use and enjoyment of the service. So therefore, this section 13 is important in a way wherein even if either the supplier or the recipient are in India, in case the enjoyment of service is happening, in case the place of enjoyment of the service is happening in India, in that particular situation, what shall be the place of supply? That can be notified by the government. So the same thing has been notified here. So notification of 4/2019. Few services have already been given in this particular section 13 of the IGST Act. Here it covers the various services which are there. So again, what types of services which has already been notified in 30th September 2019. It has also been amended to notify the place of supply of maintenance, repair or overhaul service in respect of ships and other vessels or parts thereof. So this is the particular provision which is given with regard to the place of supply with whenever the supplier or the recipient are outside India. So now this particular service, that is the B2B supply of MRO services, that is maintenance, repair and overhauling services, has also been added by virtue of notification 3/2021 dated 2nd June 2021. So with regard to the maintenance, repair and overhaul services, the place of supply in respect of the B2B supply, and the place of supply in respect of the B2B supply of maintenance, repair or overall service in respect of ships and other vessels, their engines and other components or parts supplied to a person for use in the course or furtherance of the business shall be the location of the recipient of the service. This is what is given here in the law. So therefore, whenever you are providing a B2B service with regard to maintenance, repair and overall services, with regard to repairs of ships and other vessels, with regard to repairs of the engine components of the ship or parts thereof, okay, supplied to the person for use in the course or furtherance of the business, the place of supply has been clearly given as the location of recipient of the service. So location of recipient of the service shall be the place of supply here. So therefore, here what happens because of this notification, Indian Shipping Company has received MRO services in respect of the ship or vessel from a foreign supplier. The place of supply of such service in India is in India, and the said service, why it is in India? Because the recipient of the service is in India. Therefore, since the Indian Shipping Company is located inside India, the supplier is a foreign supplier, it shall be qualified as import of service. It shall be qualified as import of service, and therefore GST should be paid on under reverse charge on these particular service. So therefore, here MRO service, in case he has received from a foreign supplier, the place of supply shall be the location of the recipient here in India, and it shall qualify as an import of service. Since it qualifies as an import of service, the GST should be paid by virtue of the reverse charge mechanism. I hope this point is clear. So that was an important amendment with regard to the place of supply. I hope everyone has understood this, and let me know in case you have any queries. Let me see if there are any queries meanwhile. Oh, Namita, after a long time. So finally, your queries are there. Let us look at your queries. I think you have asked a lot of queries with regard to other topics as well. So, sir, if room in a temple is constructed by Mr. A, builder, as a donation. See, this particular point is clarified. There is a problem question also based on this particular point. First of all, if there is no consideration, then the exemption is given. If there is no consideration involved here, the exemption is given. But if there is quid pro quo, when I say quid pro quo, it means that you get something in return. So let us take an example here. You give a donation to the temple, and the advertisement of your business is being, there is a standee of your advertisement, that is, you're getting something in return. You're getting the advertisement. That particular thing, it shall be chargeable to tax. It comes under the supply definition, right? So that is number one. Sir, if borrower takes some securities on lend, then how he repaid back? I didn't get this question. You mean to say if borrowers is when he's sending, okay, when he's buying some money, if he gives some security, how he is repaid back? I didn't get this question. If you can rephrase it, I'll be able to answer it. Sir, an import of service for consideration 7 to apply if no consideration schedule. Why government focusing so much of levy of tax on that? See, import as such is always discouraged as compared to exports, because the moment you're importing something, that means you are you are weakening the Indian currency. You're weakening the Indian rupee, because you're paying the amount to the person in that particular foreign currency, and he gets the Indian currency basically goes outside. So that is why for imports, always the government puts more taxes. Export, on the other hand, is beneficial to the country, because whenever a strong currency comes into India, then definitely the rupee is strengthened. That is why export is more benefited, right? So if Mr. X donated money in a mosque in which children are studying, will it amount to quid pro quo on part of the mosque? Not really, because in a mosque education is provided, and it does not collect any fees for that particular. So how do you analyze when the quid pro quo is there or no? For a particular amount, if you are able to clearly relate that this amount is given, so therefore for this amount this particular benefit is accrued, so that is basically a quid pro quo. But here, if the donation is given to the mosques and because of that the children are studying, there is no quid pro quo, because anyways providing education is one of the objects of the mosque. So therefore there is no quid pro quo in this particular situation. The second provision, 216 subsection 2, overrides the written agreements made between supplier and recipient where the time period is more than 180 days. Definitely it will override, because time period, though the time period is 180 days with regard to this particular agreement, in section 16.2 input tax credit is very, very clear. The payment has to be made within 180 days, otherwise you reverse. As simple as that. If you make the payment after 180 days, whenever the payment is happening, at that point of time, you claim the credit, right? So definitely it will override. So I hope the answers are clear. Now we come back to our discussion. Now, extension of time limit for filing application for revocation of cancellation of registration by a registered person permitted beyond the stipulated time. So I'll give you a background before we discuss this provision. So here, what is the procedure for applying for the registration? You give your various documents. Once you give your various documents, you will get allotted the GST registration certificate. Once you get the GST registration certificate, it can lead to cancellation in the following circumstances. Number one, if you do not file your returns on time, you don't file your returns at all in a proper manner. So in that particular situation, this for the 6 months, if you don't file your returns, it will be suo motu cancelled by the GST officer. Suo motu means on his own, he will cancel. Or in the second situation is in case you're closing your business or in case you're changing the constitution of the business, then you can from your side apply for a cancellation of the GST registration. These are the two things which happen. So the moment we apply from our side towards for the cancellation of registration, what happens here is, there is also a concept of revocation of cancellation. That is, in case you applied for the cancellation, later you wanted the registration to be revoked. That is, you wanted that registration to be reactivated. Then you have to apply for something called as a revocation of cancellation of registration. Now, for this revocation of cancellation, there was a time limit which was there, saying that once the GST is cancelled, you have to apply within 30 days. Only then you will get the GST officer will revoke the cancellation. That means he will restore the registration. Now, what happened in practical situations was many people could not take the big compliance burden due to GST. So therefore, what they started doing was they decided to stop filing the returns. So because they didn't file the returns, despite multiple reminders, in that particular situation, what happened? They could not, they didn't file the returns, and therefore, the officer went ahead and on his own he cancelled the registration. In that particular situation, within 30 days, he has to apply for revocation. So due to multiple cases and also the pandemic being coming in, when the registration was cancelled, there was no proper way wherein the registration can be restored. So that is why the government decided, rather than have a time limit here, let us leave the time limit to the officer who is adjudging the cancellation case. Rather than us giving the timeline for the purpose of revoking the cancellation application, let us give that benefit to the particular person. That is the idea behind this particular change in provision. So with effect from 1st January 2021, Proviso 230 subsection 1 of the CGST Act 2017 was substituted to permit the extension of time limit for filing the application for revocation of cancellation by registered person. Accordingly, the time limit for filing the revocation, of 30 days from the date of service of order, that is, whenever the order is served on that particular person, saying that your registration is cancelled, whenever that particular dealer gets the registration, in that particular situation, the time period of 30 days begins. So once I cancel the registration, Once I serve the cancellation order to you, from that particular date, when I say serving the order for cancellation, sending the order of cancellation to the registered person. So from that time, 30 days from the date of service will begin, right? Now here what it says is, this was the old provision. It said that for 30 days you have to file the application for revocation. However, if there is a sufficient cause being shown, that is due to some problem, the delay happened, and also for the reasons to be recorded in writing, this 30 days may be extended by the additional commissioner or the joint commissioner, as the case may be, for a period not exceeding 30 days. That means the period for filing the revocation of cancellation is 30 days. However, if you want to file another application, I mean, you are not able to file the application with 30 days, then the additional commissioner or joint commissioner may go decide together and extend it by a period. But again, that is also not exceeding 30 days. This was what it is. Then also by the commissioner also can exist for a further period not exceeding 30 days. So additional commissioner can extend for a period not exceeding 30 days, and also commissioner can also extend, but again not exceeding 30 days. So this was the provision which was there before. But now what has happened? Rule 23 sub rule 1 of the CGST rules, which covered this particular aspect, has been amended. It was amended, and accordingly, what was the amendment which was made? A registered person whose registration is cancelled by the proper officer on his own motion may submit an application for revocation of cancellation in the prescribed form to such officer within a period of 30 days from the date of service of order of cancellation or registration, right? So within period of 30 days, he can file an application for revoking the cancellation, or within such time period as extended by the additional commissioner or joint commissioner or commissioner, as the case may be. This was the change which has happened. So what is the change? The change is, earlier the period said 30 days additional commissioner could extend. And earlier the change said another 30 days the commissioner can extend. So now what has happened is, the decision to fix the time period has been given to the additional or joint or the regular commissioner. He can fix whatever time period it can be in. In exercise of the powers provided under provision to 31 at the common portal, either directly or through the facilitation center, this period can be further extended. Notification bar 15/2021, dated 18th May 2021. This was the change which has happened. So revocation of application, if you are able to satisfy, if you are able to convince the officer that due to some reason there was a delay, he has the power to extend this particular duration by whatever time he feels it is correct. Right? So I hope this point is also clear. Let me see if there are some other queries. Lot of questions on input tax credit. I hope Sailesh, the name appears new. I hope you have attended the sessions of input tax credit which I have taken. Let me, however, see the query and see whether I'll be able to solve it for you. Sir, in relation to reversal of ITC due to provision in section 16.2 for calculation of interest under 15.1, okay, whether the period starting for availing credit means date of invoice or date of entry in the books or date of filing the GSTR 3B. This is date of filing the GSTR 3B only, because the 3B is the date where you are paying the respective tax to the government. So on 3B date, when you are filing the respective 3B, you will be able to claim the credit of that and pay that. So therefore, in this particular situation, date of filing the 3B only has to be taken into consideration for the purpose of calculating of interest. So if GSTR 1 is filed by the supplier after its due date, but before the due date of GSTR 3B, can we claim ITC appearing in GSTR 2A for the invoices appearing which are not populated in GSTR 2B of that month in that month itself? Yes, this is a common practical problem we all are facing. Persons who are writing in May 2022, please don't listen to this query, because this is a new amendment which has happened. So here what has happened is, whatever is there in 2B you can claim. But if 2A gives another amount, recently we had tried contacting the help desk whenever the 2B was not updated and the 2A was updated. We got a clarification from them that you can claim the credit as per the GSTR 2A, which is logical. It is logical because the moment he has filed it and it is appearing in the 2A, It is but natural that it will appear in the 2B as well in the next one. So therefore, yes, you can take it as per claim as per the GSTR. 2A, there is no problem whatsoever. Fine. So I hope this query is also clear. Now we come back to our discussion. Yeah. Now we look at tax invoice, debit and credit notes, the change which has been done. The main change which has happened is with regard to applicability of e-invoicing. When I say applicability of invoicing, electronic invoices, that is e-invoices, are mandated for a particular business who has an annual turnover exceeding rupees 50 crores, right? This is the applicability. So therefore, here what happened is there was a number of list of persons which were given for which e-invoicing will not apply. E-invoicing is not applicable. A lot of such invoices are there. So in this particular situation, that e-invoicing are not applicable. So in this particular situation, how shall we? Another item is added to the list of the cases where the e-invoicing is not applicable. First of all, what is e-invoice? E-invoice basically is generating an electronic invoice through the GST portal. So rather than maintaining a separate invoice, the invoice itself can be generated through the GST portal. Why this has been made compulsory is the moment it is generated in the GST portal, it has to obviously come in the respective GST returns as well. Right? So the applicability is all registered businesses with an aggregate turnover in any preceding year from 2017-18 onwards greater than 50 crores. So if you have a turnover greater than 50 crores, they are mandatorily required to issue the e-invoices. However, there are particular situation e-invoices, however, exceptions are given. That is special economic zone special economic zone units, insurer or banking company or financial institution, including the NBFC. For this also, e-invoicing is not applicable. A GTA supplying services in relation to transport of goods by road in a goods carriage. Okay, so any goods transport agency is there supplying the services in relation to transportation of goods by road in a goods carriage. For them also, invoicing is not required. Supplier of passenger transportation service. If a person is engaged in transporting the passengers, that supplier, it is not applicable. Person supplying services by way of admission to exhibition of cinematograph films in multiplex screens. So in multiplex screens, you are providing the services, admission fee you are taking for the purpose of watching the movie, no need of invoices. Here the amendment has happened. Even government department and local authority, these two are also removed from the mandatory requirement of e-invoice. That is what the amendment has happened. So apart from the regular list of the cases where the e-invoicing is not applicable, also the government department and a local authority is also added to the list from the mandatory requirement of e-invoicing. I hope this issue is clear now. I hope this particular point is clear. Now we go back to the queries. Yeah, I think there are no queries at the moment. So that was basically your amendment with regard to tax invoices, debit and credit notes. That is for e-invoicing. Government department and local authorities also been added to the list of persons who are not required to generate the e-invoice, even if their turnover is more than rupees 50 crores. Now we come to Rule 138E with regard to EWay bill generation facility. EWay bill generation facility. First of all, what is an EWay bill? If the goods are sent from one place to the other, you need to issue an EWay bill, electronic way bill through the online EWay bill portal. So in that portal, whenever the goods are going, you have to generate the bill wherein you have to clearly mention the details of the products, where it is going, how it is going, the registration number of the vehicle. All this has to be clearly given. Now, there are situations wherein the facility to block the facility of generating of the EWay bill is blocked. There are certain situations wherein the situation of the EWay bill which is there, you will not be able to basically generate an EWay bill. When does this happen? When you have not filed your GST returns for a period of 2 months or for a period of 3 months. What the government does is blocks the facility of generating the EWay bill. So therefore, even if you don't file the returns, you will not be able to send that particular products also anywhere because your EWay bill generation facility is blocked. Now, when the facility was there for blocking the generation of the EWay bill, what was happening that even if that person, if for example I am a person, I have not filed my return, so therefore my EWay bill generation facility is blocked. So I won't be able to generate the EWay bill if I am sending the products to some other person. So what also happened was, if any person wants to send the goods to me, they are also not able to send the EWay bill because my generation is blocked. So here what happened is, therefore a small change took place. In the change, it was clearly mentioned that the EWay bill generation facility will be blocked only in respect of outward movement of goods. So if there is an outward movement of goods, only then the EWay bill generation facility is blocked. So Rule 138E of the CGST rules contains the provisions of blocking of EWay bill generation facility. That is nothing but disabling the generation of the EWay bill. Earlier, a user was not able to generate the EWay bill for a GST number if the said GST was not eligible for GST EWay bill generation in terms of 138E, right? So any other user also was not able to generate the EWay bill. It implies that the GSTINs of such blocked taxpayers would not be used to generate the EWay bill either as a supplier nor as a recipient. So as a supplier, you could not generate the EWay bill. As a recipient also, you could not generate the EWay bill. Earlier, this was the situation. So what is the change which has happened? The change which has happened was, this restriction has been relaxed. The rule has been amended to that extent. So blocking of GST number for EWay bill generation would only be for the defaulting supplier GST number and not for the defaulting recipient or transporter GST number. Suspended GSTN cannot generate EWay bill as a supplier. However, the suspended GSTN can get EWay bill generated as a recipient or as a transporter. So therefore, whenever I am blocking the facility of generating the EWay bill, it will only give me not allowed to generate the EWay bill for my outward supplies. So therefore, for my outward supplies, I cannot generate the EWay bill. But however, if the recipient is there or if the transporter is there, they can generate the EWay bill on my name. There is no restriction to that. They can generate the EWay bill. So simple conclusion is, suspended GST number cannot generate EWay bill as a supplier. Suspended GST number cannot generate EWay bill as a supplier. However, the suspended GST number can get the EWay bill generated as a recipient or as a transporter. Fine. This is the clarification. Therefore, in other words, EWay bill generation facility is blocked only in respect of any outward movement of goods for the registered person who is not eligible for EWay bill generation as per Rule 138E. So EWay bills can be generated, however, with respect to inward supplies of the sub-registered person. Now let us take an example here. Mr. A registered person paying tax under regular scheme in Delhi, has not filed form GSTR1 for the last 2 months. So if you don't file for a minimum period of 2 months, then your EWay bill generation facility is blocked. Mr. B, Haryana, a regular return filer, wants to generate an EWay bill for goods to be supplied to Mr. A, right? So Mr. B here is a regular return filing. He wants to generate an EWay bill for the goods to be supplied to Mr. A. As per earlier position of law, earlier what was the situation? This Mr. B could not generate EWay bill with Mr. A's GST number. So amended provision, there will be no restriction in generating EWay bill, as Mr. B, who is the outward movement, making the outward movement, is a regular return file. Mr. A wants to generate EWay bill in respect of outward supplies to H. Here it is blocked because for A, it is an outward movement of goods of Mr. A, who has not filed the GST number for GSTR1 for the last 2 months. So therefore, his EWay bill generation facility is blocked. However, as if you are a recipient or a transporter, then it is very much active. So those were some of the changes in the EWay bill. Before we go to the changes in the returns, let me see. So some more queries. Very good. Yes, sir, you have seen the lectures. Okay, thank you very much. We cannot claim ITC after 1 year from the date of issue, but the time limit is the date of filing 3B or annual return, whichever is earlier. But also 16.4 does not apply to reclaim of reversed ITC, which is having unlimited time. Which time limit to follow among these, sir? Let me understand your question. See, the time limit for claiming the ITC is always the month of September. Fine. That is, if for a particular financial year, the due date for monthly return in September, which is October 20th, or the actual due date for September 3B, that is October 20th, or the actual date of filing annual return, whichever is earlier. This is the due date. After this due date, for that financial year, you cannot claim the input tax credit. You cannot claim the input tax credit. There is no question of unlimited time, first of all, which is available. Unlimited time is always within the purview of this September month due date or actual filing of the annual return. Once those time limit is over, even though you make the payment, you cannot claim the input tax credit. So therefore, in the time limit, what you have to follow is very much the time limit which is given for claiming the input tax credit. That is for the month of September, the monthly return due date, or due date of filing the monthly return for the September, which is nothing but October 20th, or actual date of filing the annual return, whichever is earlier. If capital goods are expensed in the books of accounts by an entity who provide both exempt and taxable service, whether the same will be treated as inputs, and so can we apply rule 42 for a yes? The moment you see, because the definition of capital goods with regard to GST is very, very simple. The definition of capital goods in GST is that it has to be capitalized in the balance sheet. So therefore, if it is a capital good, but you're expensing it, that means for the purpose of GST, it is not a capital good. It continues to be inputs only. So therefore, in that particular situation, the moment you have to treat it as inputs, then definitely you can apply rule 42 instead of rule 43 for availing the input tax. Because definition of capital goods is very clear. The definition says the capital goods as disclosed in the balance sheet, as disclosed in the financial statements as capital goods, only those has to be taken into consideration. Sir, in security lending scheme, how the borrower of securities will repay back that liability? It depends. So after the time period, he may either transfer the security back to the person, or he may sell the security at that point of time and repay the money at which he had agreed upon. So therefore, in those particular ways, he will repay back that liability. Now we come to the rationalizations and the changes which has been made in the returns in GST. So first of all, in returns, basically what has happened, one of the major complaint of the citizens of the country with regard to GST is the exorbitant late fees which has been levied. since the late fee is very high, since the late fee is very exorbitant, here in this particular situation, there is a cap or there is a limit which is been given to the late fees which is applicable. So therefore, there is a limit which is clearly given and it has to be within that particular limit. So therefore, what is the maximum late fees? What is the maximum late fees which is payable under section 47 for delayed filing of GSTR 1, 3B, 4 and 7? GSTR 1 is your return of outward supplies. GSTR 3B is your summary return, which is your sales minus purchases plus payment of liability. GSTR 4 is your composition scheme return, and GSTR 7 is the return to be filed by the TDS or TCS operator. So section 47 of the CGST Act stipulates a specified amount of late fee for delay in filing any of the following by the respective due date. So any of the following, if you don't file it on time, in that particular situation, there is, if you don't file it on time, in that particular situation, a late fee is clearly given with regard to the same. So therefore, now, for statement of outward supplies, that is GSTR 1, and also returns including the returns under the QRMP, that is your quarterly return, monthly scheme, those returns also GST late fee will be applicable. Final return, that is after cancellation, that is the last return which you file, on that also late fees will be applicable. An equal amount of late fee is payable by such person under the respective SGST or UTGST Act. Penalty leviable under IGST shall be the sum total of penalties leviable under SGST and CGST Act. So whatever amount of penalty is required to be paid under the CGST Act, same amount of penalty will be required to be paid under the SGST Act. Of course, if it is IGST, both together has to be paid. The late fee can be waived off partially or fully by the central government. Consequently, since the inception, due to pandemic or due to the systems not working properly, multiple times the government has waived the late fee, right? So, but however, the government slowly got to realize that initially the late fees which was calculated was at a very, very high amount. Even for a nil return, that is, if there are no transactions and the nil return is not filed, the government was actually collecting 5,000 rupees. Maximum penalty was 5,000 rupees per month. So if a person after taking the GST registration has totally forgot it for a period of 1 year, then what happens is he has to pay the penalties for each of the month. Now there is no waiver. Whenever the waiver happens, and now it is over. Now it is late fees being regularly waived off either partially or fully. So therefore here, for the tax period June 2021 onwards, or for quarter ending June 2021 or financial year 2021, late fees is rationalized. Late fees for delayed filing of GSTR 1, 3B, 4 and 7 has been rationalized as under. So how it is rationalized, we have to see. Now it here, once the late fee earlier, everyone, including a person who filed nil returns, including a person who has less turnover, everyone, the same way in which the late fee was calculated, due to which the penalties became very, very high. So therefore, now what they have done is, they have fixed the late fee based on the turnover of the respective registered person. So therefore, if there is a registered person who has nil outward tax liability, nil outward supplies, where the total amount which is there in GSTR 3B is nil, in that particular situation, quantum of late fee is maximum 500 rupees. That is 250 in CGST and 250 in SGST. So therefore, it cannot exceed rupees 500. Where you have nil transactions. That is, you have filed the nil return. Now, other than whatever is specified above, if a particular taxpayer has the turnover of less than or equal to 1.5 crores in the preceding financial year. So if he has a turnover less than or equal to 1.5 crores in the preceding financial year, in that particular situation, maximum GST liability is 2000 rupees, 1000 for CGST, 1000 for SGST, right? So therefore, what is the turnover in your preceding year also matters when it comes to calculation of the respective late fee. Now, if the turnover is greater than or equal to 5 crores, okay, it is greater than 1.5 crores, but it is less than or equal to 5 crores. So it is greater than 1.5 crores, but it is less than or equal to 5 crores. In that particular situation, okay, sorry, it's greater than or equal to 5 crores, more than 1.5 crores in the preceding year, and it is greater than or equal to 5 crores. I'm sorry, it is not 1.5. 1.5 is already covered there. So therefore, it is 5 crores aggregate turnover of less than 1.5 crores in the preceding financial year. I'm sorry. First one, aggregate turnover of less than 1.5 crores in the preceding financial year. So in the preceding financial year, if the aggregate turnover is less than or equal to 1.5 crores, then it is 2000 late fee, 1000 CGST, 1000 SGST. Now, if it is greater than 1.5 crores and is less than or equal to 5 crores, greater than 1.5 crores, less than or equal to 5 crores, in that particular situation, 5,000 will be the late fee, 2,500 under CGST and 2,500 under 2,000 under CGST and 2,000 under SGST, right? Then registered persons other than 1 and 2 means registered person who has a turnover of more than rupees 5 crores in the preceding financial year. In that particular situation, section 47 late fee will apply, which is maximum of 5,000 SGST, 5,000 CGST. So that is the rationalization which has happened. So therefore, the late fee now is calculated based on the facts of the case and based on who is having how much turnover in the preceding financial year. So therefore, similarly, GSTR 4 also. Composition scheme, GSTR 4, there is no tax payable. The quantum of late fee is 500 rupees. That is 250 CGST, 250 SGST. And other than one covered, that is, if the tax payable in GSTR 4 is something, okay, other than what is given in 1, in that particular situation, maximum fee will be 2,000. 1,000 will be as per CGST and 1,000 will be as per the SGST. So that is for the delayed return filings of GSTR 4. So if there is a delayed filing of GSTR 4, this is basically the late fee cap which has been specified. For delayed filing of GSTR 7, for a person who is required to deduct the tax under section 51. So government, when it gives a contract to any particular person, and in the agreement it is more than rupees 2.5 lakhs, in that particular situation, what has to be done is GSTR 7 needs to be filed. GSTR 7 says that 1% tax to be deducted from the respective government company when it is making the settlement to the respective person. So here what happens is total amount of late fee, here also it is given. Quantum of late fee is 25 rupees for each day during which the failure continues. So 25 per day during which the failure continues, or 100 rupees maximum, whichever is lower. So 25 rupees per day or 100, whichever is earlier, is to be calculated with regard to delayed filing of GSTR 7. Let me see if there are any queries here before we move to the next amendment of GST. 1 year is not completed till September on year, then also we cannot claim ITC. See, you can claim ITC only to the respective time limit. It is not 1 year. It is only September. I'll give you an example. If you have a bill in March 2021, you don't have time till March 2022 to claim your input tax credit. You have time only till October 20th. That is due date of filing GSTR 3B for September, or actual date of filing the annual return, whichever is earlier. So therefore, 1 year is not the issue here. We have to say whether it is crossed those particular 2 dates which are given. Yeah. Now we come to the requirement which has been deleted. That is the getting annual accounts audited and a reconciliation statement. Again, let me give you a brief background to this particular provision. Now, what happened was, ever since GST came into the picture, as VAT and service merged into one single tax, of course, it has multiple offices. The government felt that entrusting the job of auditing and verifying the correctness of the GST compliance, if we give this particular activity to a CA, it will cause the desired effect and people will start maintaining the books properly. But what happened eventually was, there were two angles to it. The first angle, the CAs were charging a bit on the higher side. No offense, but few CAs, they said that they'll charge only that particular amount. Now, these persons are not used to paying so much fees for compliance. Please remember that. A person in VAT who used to pay only 5,000 rupees per annum for his VAT return filings now has to pay at least 25 to 30,000 for the entire GST compliance. Right? So, therefore, this was one cause for removing this. And the second cause is tax consultants or VAT or service tax consultants. Lot of them were there prior to GST. But post GST came, most of them decided to take a break or approach other chartered accountants for doing the certification work of the GSTR 9C, that is the annual GST audit. So therefore, what happened? These tax consultants also started writing to the finance minister. They explained the reasons for removing this certification work from a CA. So therefore, eventually what has happened is, to ease the ease of compliance, to promote ease of compliance, lot of small companies here in this particular situation, the requirement of doing the audit is being taken away. So wherever here, that means here the work still has to be done. You have to file your GSTR 9. You have to file your GSTR 9C. But please do it without the assistance of the CA, because the CA has now not been there. But of course, still we get queries with regard to 9 and 9C because they feel that we are technically more equipped to file the correct return. Because GSTR 9 is a very, very critical return. There we have to accordingly see which has to be taken here in the GSTR 9 and which has to be reversed, etc. That is a very, very important point here. So section 35 subsection 5, earlier what did it provide? It said that every registered person whose turnover during a financial year exceeds the prescribed limit shall get his accounts audited by a CA or a cost accountant and shall submit a copy of the audited annual accounts, the reconciliation statement under 44(2) and other documents in such form and manner as may be prescribed. So whenever a registered person, entire financial year, the turnover exceeded the prescribed limit. Entire financial year, turnover exceeded the prescribed limit. So he shall get his books audited and he shall submit the audited statements and the reconciliation statements and such other documents. This was the provision before. However, this provision shall not apply. There is a small correction in the study material, that is the statutory updates given. By mistake, it is written, however, this provision shall apply. So please add the word not there. So it shall not apply to department of the central government or state government or local authority whose books of accounts are always subject to the comptroller and general, auditor general, or an auditor appointed for auditing the accounts under any law for the time being in force. So this restriction will not apply to this director, department of central government or state government or the local authority. So with effect from 1st to August 2021, 35 subsection 5 has been omitted. That means it has been removed. That is mandatory requirement of getting the annual accounts audited and the reconciliation statement submitted by the specified profession, that is CA or cost accountant, has been, this subsection itself has been omitted. So mandatory requirement of getting audited has been removed. So with effect from 1st August 2021, Section 44 of the CGST Act has been substituted so as to remove the mandatory requirement of furnishing the reconciliation statement duly audited and to provide filing of annual return on self-certification basis. It further provides for the commissioner to exempt a class of taxpayers from the requirement of filing the annual return. Right? Exemption also is given to the class of taxpayers from requirement of filing the annual return. Fine. So this is basically the section which is given. Here what happens is annual return and reconciliation statement has to be still certified, but it need not be certified by a professional. It can be done on a self-certification basis. So you yourself certify the GSTR 9C and upload it. So this is the substituted section 44. How has it changed? Every registered person other than an input service distributor, a person paying tax under 51 or 52, a casual taxable person, and a non-resident taxable person shall furnish an annual return, which may include a self-certified reconciliation statement, reconciling the value as declared in the return, which is nothing but the GST annual return, with the audited annual financial statements within such time and in such form and such manner as may be prescribed. However, the commissioner may, on recommendations of the council, may exempt any class of registered person for the purpose of filing the annual. So this is the mandatory requirement, and this is the substituted section 44, which reads out in this particular manner. Also, nothing contained in this section shall apply to the department of the central government or state government whose books of account are subject to audit by the Comptroller and Audit or Comptroller Audit General of India or an auditor appointed for auditing the accounts of the local authorities. Okay, under any law for the time being in force. So this is the important change which has been done. So again, to give my view on that, lot of chartered accountants felt that this was a blow to their I won't say career, but this was definitely a blow to their professional practice, because GST as such came as a new area of professional practice for the chartered accountants in the year 2017. So what happened was, many people who did not have experience in indirect taxes, that is your service tax, excise, VAT, etc., they also took a passion to the subject, and because it was a professional area and also opportunities were given to the chartered accountants for the certification in GSTR 9C, etc., they took it on and they did a specialization and they did the work with regard to that. So therefore, for such people who made good revenue through the GST audits, definitely it is a blow for their professional practice. But if you ask me my view, I feel that it is a blessing. I feel it is a blessing in disguise. The reason being, the kind of certification what was required in GSTR 9C was very, very critical. You will have to say, you will have to state that the company has complied with all the provisions of the GST law. Can you be sure? And you will not have so much time for finishing the audit. You get pressurized for finishing the audit soon. So therefore, I would say it is a blessing in disguise that since GSTR 9C is still there, but only the certification has been removed, you will still require to provide your expertise when it comes to filing of GSTR 9 and 9C. Only thing, your certification is not required. And also, just for the sake of money, just for the sake of professional remuneration, if you go ahead and certify without verifying properly, you're always at a risk in the future. You're always at risk in the future. People might ask you, or the government department may ask you, how come you have certified such a GST audit case when there are so many mistakes? So that is why it is very, very critical for us to make sure that here in this particular case, section 44, I mean, it doesn't as such affect us much. So my view is to take it positively. And just because the government has removed the CA certification, it doesn't mean the value addition what we give as chartered accountants is reduced. So that was your amendments with regard to GST returns. Is basically your extension of, I mean, there is a cap on the late fee, and also the audit provisions are removed. Sir, as exemption in railways is withdrawn, Then rail fare will increase as compliance cost of Indian Railways. Please remember, exemption to railways is not withdrawn. Exemption to railways is not withdrawn. Railways continues to remain exempt. What has been removed is the leasing of assets by IRFC to the train. That was exempt earlier. So now that is made taxable. So therefore, the railways has to pay the GST whenever it takes on lease the particular wagons, locomotives, etc. from the IRFC. Of course, the cost of operation of railways will increase because now they will charge GST on the lease rent. Sir, though there is no requirement of GST audit, the entities still get the 9C to be done by themselves, but only with the assistance of CS. I don't agree totally to this statement, because when it comes to, let us take a company which has a turnover of, say, more than 50 crores. Here, such big companies will have their own finance department, will have their own full-time employed chartered accountant who is working in industry. Now, the moment he is there, he himself will finalize the GSTR 9 and GSTR 9C, and external auditor's assistance is not required. Only the person whose turnover is, say, between 5 crores and 50 crores, who does not have a solid finance department, who does not have a solid person who takes care of the GST, only such person will still require the assistance of a chartered, right? So, copy of annual accounts filed with annual returns, still CA certification is required in it or not? CA certification is not required when I'm uploading the GSTR 9C. But when I'm filing the GSTR 9C, I have to attach the annual audited accounts. But this annual audited accounts is already been audited under some law or the other. Because the moment your turnover is more than 5 crores, you are attracting tax audit under income tax. So definitely there your statements will be audited. Or if you're a company, more than 5 crores, again some audit or the other will happen. So that you have to attach along with your GSTR 9C. So therefore, the digital signature of a chartered accountant will not be required now when you are uploading the GSTR 9C. I hope this point is clear. Now we move on to the next amendment, which has taken place in the refunds related chapter. Here, what is the amendment which has happened? In case of deficiency in the refund application, if there is any deficiency which has happened, the limitation period of 2 years for making the refund claim. So therefore, a refund application can be made within a period of 2 years. That is a limitation period which is given. The limitation period is 2 years from making the refund claim. So if you are making a refund claim, you have to make a refund claim within 2 years from the relevant date, right? So that is the time limit which is given for claiming the refund. If after 2 years is elapsed, you cannot claim that particular refund. Here, this limitation period of 2 years will exclude the time period for date of filing of the refund claim till the date of communication of the deficiencies. So therefore, what is a deficiency? Now I file a refund claim. The moment I file a refund claim, if there are any deficiencies in my application, the GST department issues a deficiency memo saying that these are the deficiencies in your refund claim. So kindly correct those deficiencies and kindly file your claim one more time. Kindly file it once again. So in that particular situation, the period between the date of filing, when I'm filing the refund claim and I'm getting the deficiency memo, there is a time period of say 10 days or 15 days or 20 days. That time period is not in your control because the department is analyzing your application. So if it sends a deficiency memo after that, the time period between the filing of refund claim and getting the deficiency memo from the department, this particular time limit should not be excluded in the 2 years, right? That is your the change which has happened. So the time period for making an application for claiming a refund of tax, interest, etc. is 2 years from the relevant. So within the relevant date, within 2 years, you have to make an application as per 54 subsection 1. Further, as per rule 90 sub rule 3, where any deficiencies are noticed in the application, the proper officer shall communicate the deficiencies to the applicant in the deficiency memo, requiring him to file a fresh refund application after the rectification of such deficiencies. So therefore, here what happens when I'm making the refund claim? In that refund claim, if there are any deficiencies, the proper officer, what he will do? He will say, these are the amount of deficiencies in the deficiency memo, asking him to file a fresh refund. So you correct the deficiencies and you file a fresh refund application. So here a proviso has been added to the said sub rule to provide that the time period from the date of filing of the refund claim till the date of communication of the deficiencies in the prescribed form by the proper officer shall be excluded from calculating the period of 2 years as specified under 54(1) in respect of any fresh refund claim filed by the applicant after rectification of the deficiencies. So after rectification of the deficiencies, this particular time period will be excluded from these 2 years. That is it's a small change which has happened with regard to computation of this particular 2 years. Also under Rule 90 Sub Rule 5 and Rule 90 Sub Rule 6 of the CGST rules, there is also a facility of withdrawal of refund application by the taxpayer. That is, the taxpayer can withdraw the refund application. This facility also has been introduced. Earlier, taxpayers could not withdraw their refund applications if they had committed any mistakes while filing the application. If any mistakes has been committed, they did not have any option to withdraw this. Now there is a functionality which has been implemented where you have already filed a refund application. You can file a subsequent application and thereby withdraw the refund application which is already filed. So some newly inserted sub rules provide us under. The applicant may at any time before issuance of the provisional refund sanction order or the final refund sanction order or payment order or refund withhold order or show cause notice in respect of any refund application filed, he can withdraw the said application for refund by filing an application in the prescribed form. Please remember, in case of a refund disbursement, the refund is disbursed. First, a provisional order is given wherein 90% of the refund is disbursed. Then after certain verifications, the balance 10% of the refund is processed. After the balance 10% of the refund is processed. So here what is happening is, the applicant, when he can withdraw the claim, right, at any time before issuance of provisional order. So before issuing the provisional sanction order, you can withdraw. Okay, provisional sanction order is issued. Final sanction order is not issued. Still at that time also you can withdraw the application. Final sanction order also are given, but payment order is not released. Payment order will be released, creating the amount to the bank account. Then also you can withdraw. Or show cause notice, and you can withdraw the said application by filing the application in the prescribed form. Once you submit the withdrawal application, what happens? Any amount which is debited by the applicant from the electronic credit ledger or cash ledger, as the case may be, shall be credited back to the ledger from which such debit was made. What does this mean? Whenever I file a refund application, I either file the refund of the amount which is sitting in the credit ledger or the amount which is sitting in the cash ledger. So therefore, the moment I file a refund claim, the amount disappears from the credit ledger or the cash ledger. It is no more there. It disappears from there. So once I withdraw the application, what happens is, when whatever amount has disappeared from the credit or cash ledger will come back again and sit in the respective credit or cash ledger. Why? Because I am withdrawing the refund. Because I am withdrawing the refund claim. I hope this point is clear. This is given by way of notification 15/2021 dated 18th May 2021. See, again, you don't need to remember the notification. In case you want to still write the notification number in the examination, please make sure you write the correct one. If you don't write also, it is fine. But a big blunder will be always if you write the wrong notification, then that is a big blunder, and you will get a lot of marks deduction for that. So be very careful with regard to this. Now there is the next step which is given in rule 92(1) and 2. In case the refund is no longer liable to be withheld. Now, due to some reasons, the department may withhold the refund. Due to some situations, due to some circumstances, the refund will not be released. So therefore, it will be withheld. So in that particular situation, where it is no longer liable to be withheld, the department will pass an order for release of the withheld refund, or complete adjustment of demand for refund not required to be issued. Right. So earlier, in case where a refund is completely adjusted against any outstanding demand, an order giving details of the adjustment was issued. Right. The said provision has now been omitted. Now no order will be issued. That is, in case a refund is due, and in case there is an outstanding demand, the government usually will adjust the respective refund which is due against the outstanding demand. Earlier, they used to give a order saying as to how they have adjusted that. Now, such order will not, no such order will now be issued as per the new change which has happened. Further, proviso to Rule 92(2) has been inserted to provide that where the proper officer or commissioner is satisfied that the refund is no longer liable to be withheld, he may pass an order for release of withheld refund in the prescribed form. So where refund is no longer liable to be withheld, right? In that particular situation, he will pass an order saying that this refund was withheld earlier. Now we are releasing the same. Next change has happened in Rule 96 sub Rule 7. In case of an applicant who becomes entitled to refund after being withheld, order for release of withheld refund to be passed before passing the final refund sanction order. So whenever an applicant is entitled to any particular refund, in this situation after being withheld, the release of withheld refund should be done before passing the final refund sanction order. So whenever you pass the final refund sanction order, before that itself, you have to pass an order for release of the withheld refund. So Rule 96 of the CGST rules contains the provisions relating to refund of IGST paid on goods or services exported out of India. Sub-Rule 7 says that where the claim of refund was withheld for specified reasons, subsequently applicant became entitled to such refund, the concerned jurisdictional officer shall proceed to refund the amount after passing the refund sanction order. Right? So where the claim was withheld, subsequently becomes entitled, after passing the refund sanction order, he will go ahead and receive. Now, this was what was there earlier. Now, first what he has to do, before passing the final refund sanction order, first he has to give the order for the withheld refund. After he does, he will pass the final refund sanction order. This is the change which has been happened, the procedural change which has happened in the question of our refunds. Let me see if there are any queries here. How many times can we make application for claiming the same? Once withdrawing the application, can we make? Yes, definitely you can make. After you withdraw the application, you can make, provided you are in the time limit of those 2 years. That is an important point. You should be in the time limit of the 2 years in case you want to make the refund. Now we come to the job work provisions here, which is given. With regard to job work, there is this form which is called ITC 04. ITC 04 is the respective form here which is given. This frequency of filing the form earlier was quarterly. Now it became annually or half yearly based on the particular situation. So this ITC04 was a form which was required to be filed. Earlier it was a quarterly form. Now it has become half yearly or annual. ITC04, what exactly it is? It is an intimation that is furnished by a registered manufacturer who is nothing but the principal. He will provide the details of goods or capital goods which are dispatched to or received from the job workers. Right? It is an intimation. In that intimation, it will be given the details of the various goods or details of the capital goods which are dispatched to the job worker or which are received from the job worker. That is given. Earlier, as per Rule 45.3 of the CGST rules, ITC4 was furnished on a quarterly basis. ITC4 is to be furnished on a quarterly basis. Said form was to be furnished for the said period on or before 25th day of the month succeeding the said quarter or within such period as may be extended by the Commissioner by a notification in this behalf. With effect from the 1st October 2021, Rule 45.3 has now been amended. ITC4 is required to be furnished by the principal on annual or half-yearly basis, depending on the quantum of the aggregate turnover during the immediately preceding financial year. Right? So Rule 45.3 here has been amended. It is now ITC04, which is required to be furnished by the principal on annual or half-yearly basis. So what is the frequency which is to be taken here? If the aggregate turnover of the principal during the preceding financial year, if it is up to rupees 5 crores, ITC4 is to be filed on an annual basis. The due date for filing the ITC4 is 25th April. If it is a preceding financial year aggregate turnover is greater than 5 crores, ITC4 is to be filed on a half-yearly basis. Due dates for filing is 25th October and 25th April. Half-yearly basis, it has to be filed. These are the frequency of the job work which is given. Okay, so this is your amendment with regard to your job work. Now we see if there are any queries. So last point of withhold of refund is not clear. No problem. We'll go back again one more time and are you talking about this one? Now withhold means what? Basically, provisional sanction order will be given where 90% of the refund will be disbursed and after that 10% will be retained. This 10% retained is called the withhold refund. Now, whatever amount is withheld, he will do some verification. And then after that, he will, if he's satisfied, he'll pass the final refund sanction order. Earlier, what the situation was, if this 10% amount or whatever the amount, sometimes more than 10% also can be withheld. If it says that I'm withholding this refund due to so-and-so reasons, he will pass the sanction order. And then if he is satisfied with the explanations, he will pass the final refund sanction order. This was what the rule which is earlier. Now it is changed. First, you have to pass an order for release of the refund, saying that I'm ordering this refund is withheld refund is released. After that order, you pass the final order, final sanction order. I hope this point is clear. This was basically your withholding refund point. Now this was job work. Now we come to the foreign trade policy. Customs and FTP foreign trade policy related provisions here. So here, first thing is applicability of FTP is now extended till 31/3/2022, right? Foreign trade policy was for 5 years, basically 2015 to 2020. But because of the pandemic, what has happened is the extension has happened since the measures what is given in the foreign trade policy could not be done because of the pandemic hit all the countries. So here what happened is the provisions related to now will be in force up to 31/3/2022 unless otherwise specified. Notification 20th September. Now also, first of all, exemption from IGST and GST compensation cess extended up to 31/3/2022 in case of imports under advance authorization, EPCG, EOU, EHTP, STP, BTP units. So what was this? Advance authorization is basically you apply for an advance license. Once you apply for an advance license, you are exempted from the IGST and the GST compensation cess, or EPCG, export promotion for goods scheme, export oriented unit, EHTP, software technology park, etc. Earlier imports which are made under advance authorizations for physical export. So therefore, if you're importing some products, doing some work on that, and you're exporting those products, you can apply for an advance authorization and you will be exempted from the IGST, which is to be paid on the import of products, and also the compensation cess, which is to be paid on those products. These exemptions were given up to 30th September 2021, but now it has been extended to 31/3/2022. Again, the reason is the COVID pandemic, because the exemptions were not utilized properly by the respective businesses. Earlier, capital goods were imported under EPCG, Export Promotion for Capital Goods Scheme. It was exempted from IGST and compensation cess up to 30th September 2021. Now, this exemption from IGST and compensation cess in respect of capital goods has again now been extended to 31/3/2022. So these are some of the changes which has happened. Then in case of goods imported by the EOU from domestic tariff area, IGST cess again were exempt till 30th September. Now again, this exemption period also got extended to 31/3/2022. So therefore, similarly in FTP, what has happened? The exemptions which are given has been now extended till 31st March 2022, wherever the respective exemptions were provided. Earlier till 30th September 2021. Now it has been extended to 31st March 2020. So that was some of the issues what you have to see here. And let us see if there are any queries. Fine. Now, some other important points, basically principles of restrictions and prohibitions. It is to be in line with international agreements, the exemption. Now, a lot of restrictions and prohibitions from 10th August 2021 has been revised. The DGFT, that is the Director General of Foreign Trade, through notification may impose prohibition or restriction on export of foodstuffs or essential products for prevention or relieving the critical shortages. Again, all this is because of the pandemic. Earlier, exports were freely allowed for everything, but now since the country was reeling under the pandemic, the powers were given to the respective DGFT to provide the various prohibitions or restrictions on export of foodstuffs or essential products for preventing or relieving critical shortages. Then on imports and exports necessary for application of standards or regulations for classification, imports of fisheries, various other points are given. Import to safeguard country's external financial position, imports to promote establishment of a particular industry. So all this happens. So you can go through it. It is all can be asked for a theory question. Then also prohibitions for preventing sudden increases in imports. So if there is a sudden increase in imports, domestic producers will face the problem. So such policies also the DGFT can guide. Protection of public morale or maintain the public order relating to importations or exportations, all these things relating to products of prison labor, national treasures for the protection. For this, as per the international agreements, restrictions and prohibitions can be given. So all these are basically the various objects for which the restrictions can be given. Conservation of exhaustible natural resources, ensuring essential quantities, right? Protection of country's essential security related to fissionable materials, traffic, etc. Then taken in time in war or emergency centers, in persons of country's obligation for maintenance of international peace and security. So all these are some of the various policies which are given with regard to the FTP. These measures can be put for the question of preserving the sanctity or preserving the peace across the international agreements which are entered with the other countries, right? So with this, we come to the end of the statutory update. This is exactly covered as per the CA Institute's guidelines, which is there. Kindly go through this. Definitely, you can expect easily around 5 to 10 marks from whatever we have done in today's session. So kindly go through it. Any queries, please feel free to check with me. Now, post this, I want you to do two things. First of all, I want you to have the MCQ and the case scenario booklet ready. We are going to solve a few case scenarios post a small break now. So also have a calculator with you, because we are also going to work out those case scenarios which are given, right? So I'll meet you on the other side after a short break, and then we will take up the case scenario based multiple choice questions, and we shall work out them to test our knowledge in the GST. See you in the next 10 to 15 minutes. Welcome back, everyone. I hope you have downloaded the case scenarios booklet. Now this is on page number 62 of the booklet. The first scenario what we will see. In this particular scenario, we are going to look at the concept of value of supply, the concept of reverse charge mechanism, the concept of time of supply. These are the topics which are going to be covered in this particular case scenario. SR Associates is a partnership firm registered under GST in the state of Rajasthan. In the month of July, the following transactions were made by SR Associates. First one, purchase of commodity X on 1st July for an amount of 5 lakhs at the rate of 1000 per ton from the open market. So therefore here he has purchased a particular commodity, that is commodity X, for an amount of rupees 5 lakhs at the rate of 1000 per ton from the open market. The said commodity was deposited in the warehouse of NCDEX Limited, which is an agricultural commodity exchange in Rajasthan, as a security against transactions entered by SR Associates on the same day. In order to help hedge the aforesaid transaction, on 1st July, SR Associates undertook a derivative sale transaction in futures contract for the month of August at NCDEX at the rate of 1100 per ton. Fine. So what has happened here? SR Associates undertook a derivative sale transaction in futures contract, right? So here what it decided, so what is a futures contract here? In the month of August, I will sell it at 1100 per ton. But the contract was, the transaction happened on 1st July itself. So here what is the time of supply is what is something which you have to make up your mind, the question which is asked on this. Third one, SR Associates took subscription for AI, artificial intelligence based platform, from an unrelated party, ABC Inc., a company based in US, to get real-time updates on the pricing of commodity X in international market. ABC Inc. charged 50,000 for such subscription. The invoice was issued to SR Associates on 1st July, but the payment was made to ABC Inc. on 20th August. So here what has happened? You have taken a subscription from outside India. So therefore, this is an import of service. So once it is an import of service, RCM will immediately get triggered here. So reverse charge mechanism will be applied. NCDEX charges rent from SR Associates at 10,000 per month. 10,000 per month is the rent which is charged by NCDEX, because here what you have done is you have deposited in the warehouse, so therefore they will charge rent. Service charge also they have charged at 20,000 per month. On the date of expiry of futures contract in the month of August, that is 31st August for commodity X, the rate was 900 rupees per ton. SR Associates squared off the contract for the month of August at the same rate. So at the same rate, SR squared off the contract. So here what is happening? Whenever the date was expiring, the rate was 900 rupees per ton. 900 rupees per ton, SR Associates squared off the contract for the month of August at the same rate. So therefore, the future contract, what it was entered was 1100 rupees per ton for the month of August. So therefore, once it was 900 rupees per ton, SR Associates squared off the contract. That means it sold for 1100 itself, because that was the contract what it undertook. NCDEX charged brokerage on both the transactions for purchase and sale of derivative contracts separately at the rate of 5,000 per contract from SR Associates. In the month where such transaction was, brokerage also was charged at 5,000 rupees. On the purchase of commodity X, additional levy in the form of mandi tax was applicable. This is some other tax which is charged on the purchase. So whether this forms part of the value of supply is the question which you have to answer when you are working out the solutions. On purchase of commodity X, additional levy in form of mandi tax was applicable at the rate of rupees 10 per ton, which is not included in the rate per ton given under point A above. Right? So therefore, point A, this 5,00,000 is there. Apart from this, this mandi tax was also paid. All the amounts given above are exclusive of GST unless otherwise provided. The opening balance of input tax credit for the relevant tax period is nil. Subject to the information given above, assume that all the other necessary conditions for availing the ITC has been fulfilled. Assume that there is no outward or inward supply transaction apart from the aforesaid transactions in the month of July and August. GST applicability in the aforesaid at the following rates unless otherwise specified: intrastate 9% CGST, 9% SGST, interstate supply 18% IGST. Now let us look at basically the questions which are asked. Compute the taxable value of supply of commodity X for SR associates in the month of July. So what is the taxable value of commodity X? Please go through and try to work out from your side. Very simple question. Taxable value of commodity X. Which question you have asked regarding registration, Sailesh? Answer to the query regarding registration. Let me see. Can you tell me which question, Sailesh? I'm not able to check what is the query you have asked regarding registration. If can you please type out the query, because I'm not able to see the query. Yeah, so basically in this particular situation, what is the taxable value? He has purchased the particular commodity X at 1,000 rupees per ton at 5 lakh rupees, that is 5 lakhs, and monthly tax at whatever is there, 10 rupees per ton. So you have to see what is 10 rupees per ton. So totally 5 lakh was the value. So 500 tons were purchased. 500 tons into 10 rupees, 5,000 is the Mandi tax. So as per section 15 of the CGST Act, all the taxes, duties other, other than the GST shall be included in the value of the supply. So this Mandi tax also will be included in the value of the supply. So the taxable value will be basically 5 lakh 5,000. 5 lakh 5,000 is your taxable value. Now we come to the second question in the same case scenario. Second question, compute the value of outward supply made by SR associates in the month of August. Value of outward supply made by SR associates in the month of August. Very tricky, slightly tricky question. You have to read it carefully. Yeah, Namita, you have answered it as A, which is nil. Can you tell me the reason why you feel it is A? Can you type out the reason? I want to know whether you've understood the reason correctly. The answer is correct, obviously, because the answers are given straight below. But why it is A? That is why it is nil. Yes. So therefore, first of all, the square off is happening here. And secondly, another important point is the question clearly indicates that for August, what is the amount? Value of outward supply for August. So here, if you see, the transaction took place in July. So once the transaction took place in July, even if the outward supply was there, you have to take into account only in the month of July. Since the question clearly mentions August, therefore there is no supply, so therefore it is nil. Now we come to the third one. What is the time of supply for subscription of AI-based platform by SR Associates? 1.3. Please try to answer this question. Yes, August rate became 900. Actual sale did not happen. Correct. The third one. Please try to answer the third one. I want the answer with reasons. Only then I'll be able to understand whether you have got it. Why do you think it is 1st July? What are the reasons for that? See, in this particular situation, if you go to this AI based platform, the moment it is an import of services, you have to look at what is the time of supply. The time of supply for import of services, that means the time of supply for reverse charge mechanism, is either 60 days from date of issue of invoice or the date of payment, whichever is earlier. These are the timelines which are mentioned here. So what is the invoice which is mentioned here? The date of invoice here is 1st July. 60 days from 1st July comes somewhere around 1st September or 31st August. Payment made on 20th August. So date of payment is earlier than 60 days from the issue of invoice. So therefore 20th August will be the time of supply. I hope you got this point. 20th August will be the time of supply. It is not date of invoice or payment, whichever is earlier, Namita, because it is a reverse charge mechanism. So if it is a reverse charge mechanism, the times which you have to consider is either 60 days from the date of issue of invoice or the date of payment, whichever is earlier. Fine. So that is, you need to, that's why read it very carefully. You have to understand, only then you'll be able to look. Now we go to 1.4. Compute the net GST payable in cash by SR Associates for the month of August. 1.4. Try to answer this question. Yeah. Yeah, now I got some queries. Namita, I saw your answer. Please be very careful. Again, go through the question, again type. Yeah. Sailesh, assume that I've opted for 44AD presumptive basis under income tax, so there is no requirement to maintain the books of accounts. Let's say if my turnover only sales, no other receipts more than 20 lakhs, but less than the prescribed limit. So as per GST law, I need to get GST registration as it's 20 lakhs, maintain the books of accounts. Which law will prevail here, sir? Or both needs to follow? For income tax point of view, you don't need to maintain the books of accounts, but from GST point of view, you have to maintain the books of accounts. That means it's very simple. The income tax department cannot issue a notice. The income tax department will not issue a notice because the scheme is there under the income tax under 44AD. But the GST department may issue a notice calling from your record, the accounts and records. That time you cannot say that since I'm under presumptive taxation, I will not maintain the books of accounts, because under GST law, you are supposed to maintain the books and records, accounts and records. I hope you are clear in this one. Yeah, Vidula, you have got the answer correct. Very nice. So 9,000 rupees the answer for this. How we have got 9,000 rupees, as we discussed in the previous question. Import of services reverse charge mechanism is applicable. Reverse charge mechanism, you have to pay it in cash. Okay, so 9,000 you will have to pay it in cash under reverse charge mechanism. So 9,000 is the answer for this particular question. Now next one, compute the input tax credit balance available with SR Associates for the month of July. What is the input tax credit balance which is available with SR Associates? Please try to answer this question. Yes, Namita, now you got it. But your first try it was nil. So read the question very carefully. Yeah, I understood. I understood your question, Sailesh. Which law will prevail here? From GST point of view, GST law will prevail. From income tax point of view, income tax law will prevail. As simple as that. Income tax officer cannot issue a notice for you to give your books of account because it is under 4480. But in GST 100%, they may call you for giving your accounts and records. That time you cannot tell that since it is presumptive, I have not maintained the books of accounts, because he will tell that as per GST, you are supposed to maintain the books of accounts. Yeah. Next question, that input tax credit. Very interesting question that is. Yeah. So if you now look at what is the input tax credit, let us now go through the question. Here, if you see, the first thing is purchasing the commodity X, for which the value you know by now. That is the first question. That is 5,05,000. So 5,05,000 into 18%. Okay, 5,05,000 into 18% is 90,900. 90,900 basically is your purchase of the commodity. And secondly, derivative sale transaction, future contract, that anyways is not in the question. Then you see what are the expenses here. He's asking input tax credit available. RCM, you can take the credit, but only after payment in cash. So input tax credit balance is asking. So that import of services will not come here. Then NCDX charge brokerage on the transactions is saying. So brokerage on the transactions, 5,000 rupees into 18%, which is 900. So 90,900 is the GST on purchase of commodity. GST on brokerage is 900. Then rent and service charges. Rent is 10,000, service charges 20,000. 30,000 into 18% is 5,400. So 90,900. One second, I'll just share the other screen so that you can look at the solution. Yeah. So if you see on commodity, 5,05,000 into 18% is 9,900. GST on rent and service charge 5,400. GST on brokerage is 900. So total input tax credit is 97,200. It is 97,200. I hope you understood that point. So that is the answer for the fifth question. That is 97,200. I hope all of you understood as to how we got that particular solution. Now we go to the third question. Disha Enterprise Private Limited is a financial service company having its offices in Kolkata, West Bengal, and Mumbai, Maharashtra. The company is registered under GST in both the states. The company operates through two segments. One is a banking service, and the other is advisory and consulting services. Aggregate turnover of the company during the previous year was 80 lakhs in West Bengal and 60 lakhs in Maharashtra. The bouquet of services provided under each of the two segments are as follows. Banking services, recovery agent, direct selling agent services, advisory and consulting. He does the company, LLP, society formation, return filing, detailed project report preparation, business promotion, etc. Company has carried out following transactions during the month of September. Sale and purchase of foreign currency, please refer note 3, we'll see that later. Second, amount received from Devidas Private Limited. It has sponsored the business exhibition organized by Disha Enterprise Private Limited, 90,000, 70,000. This is the amount which is received. Immediately in your mind, sponsorship means reverse charge mechanism should come because sponsorship is subject to reverse charge mechanism. Commission received as a direct selling agent from ICAI Bank for opening bank account, credit card and loan products, 48,000, 50,000. Is this also subject to RCM? Please think and let me know. Then commission received from private banks for acting as a recovery agent, 1,20,000 Kolkata, 1,50,000 Mumbai. Professional fee received for the formation of a company, LLP or society, 80,000 and 40,000. Professional fee received for GST or TDS return filing, 65,000, 75,000. Participation fee received from customers for business exhibition organized by the company, 50 lakhs held in Russia, 4 lakhs held at Chennai. Refer note 1, we'll see that now. Legal fee paid to Sundaram Advocate, again, reverse charge mechanism, 10,000, 15,000. Payment made for security services by way of supply of security was received, 25,000 Globe Security Private Limited, 25,000 Exenco, partnership firm registered under GST. Right? Again, reverse charge mechanism question will come here. Now let us look at the notes. The participation fee of 50 lakhs received by the company is in respect of a business exhibition organized at St. Petersburg, Russia, under the theme Indian Traditional Fair, in which 10 Indian companies all registered under GST had participated. A participation fee of 5 lakhs from each Indian company was collected for providing them a stall, furniture and other amenities at Russia. The participation fee of 4 lakhs in respect of business exhibition organized in Chennai, in which 100 Indian companies are participating. Now here what is happening, the place of supply event happening outside India means the place of supply is Russia here in this particular situation. And also exhibition was happened there. Everything was collected there. Out of the professional fee of 80,000 received by Kolkata office for formation, 15,000 was towards reimbursement of client. Separately mentioned indicated that it was deposited with the registrar of company. So these are this 15,000 is basically for government expenses which is incurred. Note number 3 is regarding the foreign currency purchase or sale. Following purchase and sale of foreign currency were made by the company during the month of September. Kolkata office had purchased 10,000 US dollars from Moneywise, a forex dealer, at 74 rupees per USD on 10 September. RBI reference rate on that date was 73 rupees per USD. Mumbai office had sold 5,000 USD to Money Matters on 15 September at 73.2 per USD. RBI reference rate for USD on that date is not available. RBI reference date is not available. In an order dated 14 September issued to Disha Enterprise, Joint Commission of CGST Mumbai has raised a demand of 600 crores on Mumbai office in respect of a interstate supply transaction. The company is disputing entire demand and wants to file an appeal before the appellate authority against the order. Kolkata office has received 1 lakh as advance from Ganesh Flour Mill, client for preparation of DPR. However, tax collected has not been deposited with the central government since 4 months. All the amounts given above are exclusive of GST where applicable unless otherwise specified. There is no outward or inward supply transaction apart from the aforesaid transactions. It is not an authorized forex dealer as well. Very important point. Disha Enterprise is not an authorized forex dealer. Based on the facts of the case, choose the most appropriate answer. First one, determine the value of taxable supply with respect to sale and purchase of foreign currency by Kolkata office and Mumbai office of the company as per Rule 32(2)A of CGST Rules 2017. Try to answer the first question. Sir, on 5,05,000, why IGST is charged? As supplier details is not given, how can we assume it as interstate supply? Let us go back to the question. But how is that relevant? What was the question which was asked? Nowhere in the question we are showing it as IGST, right? State of Rajasthan, 1 lakh from open market, Rajasthan security transactions on the same date. IGST, the amount is just value of supply. Nowhere it is mentioned IGST. Just that the rates are given. Nowhere it is mentioned it is IGST. It is just mentioned as GST payable on. Right? Sir, why on rent 18% is charged as NSEDX? Yeah, 18%. See, this MCQs, you have to assume the rate as 18%. Since it is given clearly that it is 18%. On any amount, the GST is required to be charged, is what we have to assume when you are calculating the case, when you are calculating the answers for this particular question. Now, please try to answer the question for this. So if you look at this question, how do you calculate the value of supply with regard to purchase or sale or foreign currency? So if you see in the first situation, if you look at this particular question, value of taxable supply is being asked. He is not asking the GST to be calculated. He is asking the value of taxable supply. So value of taxable supply, if you look at note number 3, where it talks about the foreign currency, Kolkata office has purchased $10,000 from Moneywise at 74. RBI reference rate was 73. In case RBI reference rate is given, the value of supply will be the number of USD into difference between the RBI rate and the purchase rate. So 74 rupees is the purchase rate, 73 is the RBI rate. So 1 rupee is the difference. So 1 into 10,000 dollars, that is 10,000 rupees is the value of supply for Kolkata. 10,000 rupees is the value of supply for Kolkata. In the second case, Mumbai office has sold 5,000 to Money Matters on 15 September at 73.2 per USD. RBI reference rate for USD on that date is not available. If RBI reference date is not available, it is very simple. 5,000 into whatever amount you have purchased. 5,000 into 73.2. That is 3,66,000 into 1%. So 1% of the gross amount in INR is the value of supply in case the RBI reference rate is not available. This is what is given in rule number 32. In valuation rules, if you see value of supply, valuation rules rule number 32, this is the way it is given. So 3,660 is the value of supply when it comes to your Mumbai office. So here the answer will be point number 2. That is Kolkata office 10,000, Mumbai office 3,660. I hope how you are able to go. I hope you got the answer correctly. Yes, Sailesh, you have got it correct. Namita also have got it correct. Good job. So basically, these MCQs don't have answers. So separately, the CA Institute has not released the solutions for these MCQs. So that makes it very interesting for us to work out. And if we get the answer right, definitely it gives us a good thrill. Now, the next question. The value of taxable supply received by the Mumbai office in the month of September on which tax is paid under reverse charge is. So here, value of taxable supply received by Mumbai office. Received by Mumbai office on which tax is payable under reverse charge. Please try to work out this one. Very tricky question, but very interesting as well. Yeah, now let us look at the solution here. See, now what is happening here? Value of taxable supply received by the Mumbai office in the month of September. So what are the value of supplies received by the Mumbai office? Now, first one, amount received from Devidas Private Limited, it is sponsored. So there is all likelihood that we may get confused here thinking that this is the value of taxable supply received by the Mumbai office. Here what is happening? Devidas Private Limited is giving the particular amount. It has sponsored the business exhibition. So here what is happening? The supply is being provided by Disha to Devidas. So therefore, this will not form part. Though it is subjected to RCM, this is not a value of taxable supply which is received by the Kolkata or Mumbai office, right? So therefore, we have to ignore this 90,000. Similarly, this 48,000 and all of this is taxable supply which is provided. What is the taxable supply which is received by the Mumbai office? You have to take that into consideration. So here, legal fee paid to Sundaram, an advocate, 10,000 rupees, right? 10,000. Oh, sorry. The question is asking Mumbai office. So Mumbai office is here. So legal fees paid to Sundaram advocate is the taxable supply which is received by the Mumbai office, on which tax is required to be paid on the reverse charge mechanism. 15,000 legal services taken. Second one, security services, if it is given to person other than body corporate, that also RCM. It does not matter whether that other security service provider is registered under GST or not. You have to pay it on reverse charge mechanism only. So 15,000 legal services, 25,000 security services, 40,000 shall be the value of supply under the reverse charge mechanism. I hope this point is clear. 40,000 is the answer for this particular question. Yes, Namita, you got it right. 40,000 will be the value of the supply. But here he is asking, what is he asking here in the question? He is asking 25,000. Yeah, you're right. 15,000 security services, 25,000, 15,000 legal services. Now we go to the next question. The value of taxable outward supply made by Kolkata office in the month of September, on which Disha Enterprise is liable to pay tax under forward charge, is dash. Please try to work out this one. So here, what is the amount you have received? Taxable outward supply made by Kolkata office in the month of September, on which it is supposed to be paid on the forward charge. What is the value of the supply? Please try to answer this one. So here, if you look at the outward supply on which that is asking only about Kolkata office. So let us look at only the Kolkata office. So what all does the Kolkata office do? Now, amount received from Devidas, this is reverse charge mechanism. Devidas will pay on the reverse charge mechanism. Then DSA, commission received as DSA from ICDI Bank for opening bank account, credit card, and other loan related products. Now, this is the interesting point. Now, direct selling agent appointed by the bank, the exemption notification mentions individual direct selling agent. Individual direct selling agent to the private sector banks is subject to reverse charge mechanism. So the moment it says individual DSA, only then it is RCM. But this is a private company. So therefore RCM will not be applicable. So this 48,000 will come under forward charge mechanism. So commission received as DSA, 48,000 comes under forward charge mechanism. Commission received from private banks for acting as recovery agent. For this, there is no restriction in reverse charge mechanism. Even if it is a private limited company, if you are getting for acting as a recovery agent, if you are getting some amount, then straight away it comes under the reverse charge mechanism. So this 1,20,000 will not come. So 48,000 will come under the forward charge mechanism. Then professional fee received from formation of company LLP society, 80,000. 80,000 from this, however, 15,000 is towards ROC fees. So ROC fees basically whatever amount is being incurred by the professional. It is in the capacity of a pure agent because that particular amount is being reimbursed. So in this particular situation, 15,000 will not be considered. So from 80,000, 15,000 will be removed. So professional fee for formation of the company LLP, 65,000 will be taken as your professional fees for formation. Then professional fees for the GST TDS filing, that is straight away 65,000. So these are only given for outward supply. 1,78,000 therefore will be the value of output supply. 1,78,000 is the answer for the third question. DSC is not individual. In the company, it is clearly mentioned, the Disha Private Limited. Disha Enterprises Private Limited. It is very, very clearly mentioned. So 2.3, the answer is 1,78,000. 2.4, the value of taxable outward, the maximum amount of pre-deposit that Disha Enterprise Private Limited can be asked to deposit under the IGST Act 2017 for filing an appeal before the appellate authority is dash. What is the maximum amount of pre-deposit? In appeals chapter, you would have read this. Outward supply 1,45,000. No, how you got 1,45,000? Professional fee. No, that 15,000 is not professional fee. It's a reimbursement. You have to remove that. You have to remove that. Yeah. So in this particular situation, what is the pre-deposit? With regard to pre-deposit, the law which talks about the pre-deposit, it says that the pre-deposit should be either 10% of the disputed amount or rupees 50 crores. Okay, whichever is lower. That is up to a maximum of 50 crores it can be. So therefore, in this particular situation, disputed tax amount is 600 crores. So 10% comes to 60 crores. But however, since the maximum is only 50 crores, 50 crores is the answer for this particular question. D will be the answer, that is 50 crores. Now 2.5, the maximum penalty prescribed under 122 for failure of Kolkata office to deposit the tax collected on advance received from Ganesh Flour Mill is. Penalties and prosecution chapter, you need to have the idea to answer this particular question. Sir, what about event organized in Russia? How to treat that supply? See, event organized in Russia basically in that question, why we have not considered is because it is clearly not given whether the Kolkata office has done that or Mumbai office has done that. But in case you're asking this question, you have to refer to section 13 of the IGST Act, wherein event which is located outside the place of supply is the location of the event, which is outside India, and the service provider is inside India. So therefore, technically, it is an interstate supply, will be treated as an export of service. So therefore, the last one is the penalty, again theory question. If you only studied the topic, you'll remember that in this particular question, the 10,000 or the tax evaded, whichever is higher, is the penalty which is prescribed for this thing. Please don't get confused between interest. Is asking the question is regarding penalty. Now we go to the fourth question. This particular MCQ case scenarios. Any queries till now? Yeah. So I don't think there are any further queries. Yeah, now let us go to the fourth question. ABC Limited is a public sector undertaking engaged in the business of generation of electricity from conventional and non-conventional sources. The Government of India holds 75% equity in the said company, and balance equity is held by institutional and domestic investors. The company has taken a separate GST registration under GST in each state where it has business operations. The company has its head office in Delhi, and power plants are located in states of Bihar, Orissa, and Chhattisgarh. Following transactions were carried out by the company during the month of February. Sale of electrical energy to DISCOM. DISCOM means the local electricity corporations in each state. Bihar plant 2.5 crores, Delhi head office none, Odisha plant 3.5 crores, and Chhattisgarh plant is 4 crore 50 lakhs. Bank interest received on savings bank deposit and fixed deposit 18 lakhs, Delhi head office, Bihar 3 lakhs, Odisha 5 lakhs, Chhattisgarh 8 lakhs. House rent recovered from employees for residential accommodation provided to them. You should clearly know whether GST is taxable to know this or not, right? Then you'll be able to answer the question. 55,000, 30,000, 25, 40. Rent collected from bank, ATM, post office, and shops located in office premises 48, 15, 12, 60. Sale of iron or metal scrap, excluding TCS at the rate of 1%. 85, Delhi is none, 85, 45, 65. Other income 2,50,000 in Delhi. Bihar dash, Orissa dash, Chhattisgarh is 45,000. In addition to the above information, following transactions were also carried out during the month of February. A supply order for stationery items was awarded by Delhi head office to Stationery Mart New Delhi for 3,36,000, including GST at 12% in January. Vendors supplied stationery items for 44,800, including GST at the rate of 12%, and issued the tax invoice in February. Delhi head office had made the payment of the said bill in February by crediting the vendor's account for that amount on the same date in its books. The remaining amount was paid on April on the supply of balance items. Odisha plant purchased office furniture for 2,80,000 during February from an unregistered dealer. The rate of GST on the said furniture item is 18%. A board meeting for raising term loan for project expansion held in February. Delhi office paid 20,000 as sitting fees. 4 independent directors who attended the meeting. Safety and security. The company has engaged private security as well as CISF. The following payments were made in February in the respect of the bills. CISF in Delhi none, Bihar plant 10 lakhs, Odisha plant 8 lakhs, paid on 15 February, Chhattisgarh 14 lakhs on 5th February. ABS Security Services Private Limited 5 lakhs paid on 11th February. Bihar plant purchased a machinery in February from Sahu Enterprises for 86,000. Full payment was made in Feb. The rate of GST on the machinery is 18%. All the amounts are excluded wherever applicable. Based on the facts of the case, choose the most appropriate answer. First one, value of taxable supply on which GST is payable by Delhi under forward charge for the month of February is. In this, please note that the answer is given incorrectly, as in the answer is not in the options. So please consider one option as 2,98,000. So I think there's a typo in some of this thing. One of the options should be 2,98,000. So please try to answer. Sir, in question 2.3, if we remove 15K, then 1,30,000. So how you said 1,78,000? Wait. I will share the screen of the solution so that you get the clarity. Yeah, if you look at it, this is how you have got 1,78,000. Commission as DSA is 48,000 because DSA is a private limited here. Professional fee for LLP formation is 65. TDS or GST filing 65. Total is 1,78,000. This is how we have got that answer of 1,78,000. I hope you understood. Fine. So try to answer this one now. Yeah. Forward charge for the month of February for Delhi head office is the question. So therefore, if you look at the questions here, Delhi head office bank interest, it is non-GST. House rent recovered from the employees, it is exempt. Rental amount for residential purposes is totally exempt from GST. Rent collected from bank, ATM, post office is very much taxable. So 48,000 will be the taxable amount. 48,000 will be the taxable amount. And then apart from this, your other income is 2,50,000. Since here other income is not clearly mentioned whether taxable exempt, then in case we have to assume it is taxable only most of the situation. 2,50,000 plus 48,000. 2,98,000 is the answer for the first question. It is not there in the question, but is there in the answer. 2,98,000 is the answer. I think maybe for the first one, it is a typo. Instead of 21.298, he has mentioned as 21,78,000. Now the second one, the value of taxable inward supply on which GST shall be paid under reverse charge by Bihar power plant is what? Please try to answer. 4.2, reverse charge mechanism. So if you look at the question, he's asking GST under reverse charge for the power plant. So under Bihar, what are the reverse charge mechanisms? So all these are nothing is reverse charge mechanism here. So therefore, if you go down, security charges. So sitting fees is there, but again that is Delhi head office. So Bihar is asking the question. So don't get confused. So Bihar private security as well as CIS. No special exemption for CISF is given for reverse charge. So therefore, if the security charges, straight away RCM will be up. So Bihar has paid 10 lakhs. So 10 lakhs is basically the reverse charge mechanism. Also here, the Bihar plant purchased the machinery from Sahu Enterprises for 86,000 not registered. Again, here also there is no reverse charge because this section 9 subsection 4 was earlier when GST first came. Now it is no longer there. So only this 10 lakhs will be your reverse charge with respect to Bihar plant. So answer is B, 10 lakhs. Then third one, the value of supply on which TDS under 51 shall be deducted by Delhi HO while making the payment to stationery mart is dash. What are the options in this? 4.3. Please try to answer this. 4.3. I'll upload the answer sheet, not a problem, but that is very brief. I'll do that. Don't worry. $86,000 as supplier is unregistered. 86,000 is nowhere concerned with RCM here. Supplier being unregistered, 9 subsection 4 or RCM basis was there once the GST law first came. Later it was removed. So therefore on 86,000 no need of any RCM. Please bear in mind. Yeah, 4.3, very interesting question. Stationery mart. Let us see here. So first of all, what is the TDS applicability under section 51? When any government undertaking has an agreement of more than 2,50,000 with any particular person, it is supposed to deduct tax at the rate of 1% under section 51. So here, again, since it is a public sector undertaking, it has to do TDS under section 51 of the CGST Act. supply order for 3,36,000 including GST. So 3,36,000 into 12 by 112, the taxable value is 3 lakhs. So 3 lakhs is the taxable value. So more than 2,50,000 is the value of the contract. 3 lakhs is the value of the contract. Therefore, TCS is applicable. TDS is applicable. Number one, that you have to get in mind. TDS is applicable. But how much has to be charged? If you see, the vendor supplied stationery items of 44,800 only. So that means remaining amount was paid later in April. But here in the question, he is asking that what is the value on which TDS shall be done when making in February is the question. So therefore, you have to see only the amount which has been supplied in February, which is 44,800 including GST. 44,800 into 12 by 112 is 4,800. So taxable value is 40,000. So 40,000 is the taxable value which is given. So therefore, here the value of supply, he's asking the value of supply on which TDS is to be done. It is 40,000. That is the taxable value. I hope the answer is clear. So 40,000 is the answer for this particular question. So here, next one. What is the value of supply on which GST is payable by Odisha plant on the sale of scrap? Now he's asking what is the value of supply on which GST is payable for this sale of scrap. Again, if you go here, 4.4, the sale of scrap. Where is the sale of scrap mentioned here? Sale of iron or metal scrap excluding TCS at the rate of 1%. Now there is a confusion here. When he says excluding TCS under income tax, TCS is applicable for the purchase of crop. It is no way concerned with the total value of GST. GST is straight away value of supply you have to take apart from the TDS. So if it is excluding TCS, you don't try to apply any TCS here. Straight away, 45,000 will be the value of supply. 45,000 will be the value of supply for the purpose of GST applicability. Fine. So that was this particular case scenario. So what I will do is now straight away, since someone asked for the solutions, I will go ahead and upload it. It is just hint based solutions, not elaborate solutions, but you'll be able to understand it. I'll do it right now so that yes, I have uploaded the case scenario. Now let me go ahead and upload the statutory update notes also, so that so if you are able to answer these case studies properly, that means you have a good knowledge and you have attended all the classes properly. If you have absolutely no idea, with regard to working out these case scenario based MCQs, that means you have to attend the classes once again very seriously. If you are able to somewhere get the answer, but you're not able to get it out on paper, that means you have attended the classes properly, but you have not revised the subject. So therefore, a comprehensive knowledge of GST law is important in case you want to do this particular work. Statutory update PPT also is been uploaded. Fine. So I think we are done with today's quota of any further queries. Let me go to the questions. Yeah. Now let us go through the next case scenario. That is the sixth one. Second, I think, just give me a moment. Some reason that yeah, so yeah. Now we go to the sixth one. Let us go through this. Please try to work this out as a homework problem because we don't have much time today to complete the entire thing. But let's go through the problem. I'll give you the hints to work out this problem. Mr. Ashok, proprietor of Messrs. Office Link Enterprises, is engaged in trading of office stationery items in its stationery store located at Salt Lake City, Kolkata. The said store is taken on lease from Kolkata Municipal Corporation. So he is a trader in stationery items and is taken the store on rent from Municipal Corporation of Kolkata. During previous financial year, turnover of Messrs. Office Link Enterprises was 14 lakhs. Previous financial year, it was 14 lakhs. Ashok supplies goods within the state of West Bengal, but purchase stationery mostly from Delhi and Mumbai. That means his purchases are most of it are IGST purchases, but sales are CGST, SGST. He owns a duplex house in Newtown, Kolkata. He stays in the ground floor and let out the first floor to employee of IDTL Bank for residential purposes. No question of GST, clearly exempt. Rent for the same is paid by IDTL Bank to Ashok. Whoever pays the rent, it is of no relevance. Residential purpose means exempt. During the current financial year, he applied for GST registration on voluntary basis on 2nd April, and the registration was granted to him with effect from 9th April 2021. So he applied from 2nd April, but he got granted from 9th April. So what is the effective date of registration? You have to understand based on what you have read in section 21 to 24. The details of his stock position also is given during current financial year. Office stationery items purchased from registered dealer on 2nd April 2021 is 1 lakh. On 8th April 2021 is 1 lakh. Books, periodicals, journals, newspaper, maps, etc. is 0.2 lakhs on 2nd April. On 8th April, it is 0.3 lakhs. Details of transactions carried out by Ashok during current financial year is furnished here under. Sale of office stationery, again intrastate, 3 lakhs between 1st to 8th. 9th to 31st, it is 84 lakhs. Sale of office stationery items, intrastate supply to unregistered, 1st to 8th April, 2 lakhs. 9th April to 31st March 2022, 14 lakhs. Legal fees paid to advocate, 0.1, that is 10,000. Purchase of stationery items, 3 lakhs, 74 lakhs. Purchase of furniture for use his own office from unregistered dealer, 1 lakh. Purchase of stationery items from a registered dealer of Delhi, 1 lakh and 18 lakhs. Lease rent of stationery store paid to KMC, Kolkata Municipal Corporation, 1 lakh 20,000. Transportation charges paid to Mrs. Gati Transportation at GTA. Tax is not payable at 12%, 0.1, 1.5. Interest paid on borrowings from BBI Bank 0.2 1.8 lakhs. Accrued interest on fixed deposit 16,000. Rent received from IDSA for its employee 2 lakh 40,000. Mr. Ashok went to Mumbai for a business meeting in Feb and stayed in Hotel Blue Pines. Hotel charged 1 lakh for the stay. Very interesting aspect here. Once he goes somewhere else and stays there, will it charge IGST or CGST or SGST? What is the place of supply here? That is an interesting point what you have to work out. All amounts given above are exclusive of GST wherever applicable unless otherwise specified. Assume that there is no other outward or inward supply transaction apart from the aforesaid transaction current financial year. GST is applicable on inward and outward supplies except on services of transportation of goods at the following rates are also given. So based on the facts of the case, choose the most appropriate answer. Value of outward supply which shall be subject to GST for current financial year. So here you have to see when he is registering, when he is applicable for registration, is it a voluntary registration or a compulsory registration, and when is he liable to GST, and for what amount you have to calculate the GST. You have to work out the value of outward supply only. Second, 6.2. Which of the following statement is correct in terms of facts of the case scenario given above? He cannot opt to pay tax in FY 22-23 under composition scheme under 10.1 and 10.2. Whether he can opt or not for composition scheme, that is number one. Ashok is entitled to take ITC of inputs held in stock. So input tax credit when he is getting registered, when he can take the credit, that you have to take in this particular point. Then Mr. Ashok shall be liable to pay GST at a reverse charge 9.4 during current in respect of purchases. Whether this is correct? 9.4 is, as I told you, no more there. So definitely this statement is wrong. Mr. Ashok is entitled to take ITC of inputs held in stock on 8th April. Very similar to what is given in A, but B. So what is the correct date as per the GST law? 1st or 8th is what you have to check. Value of supply 6.3 on which is payable under reverse charge. These also you have to check as to what is the reverse charge items which is given in the question. Then, which of the following is not subject to payment of tax under RCA? Short print paid to KMC, legal fee paid to advocate, purchase of stationery items. This is very, very simple question. Legal fee paid to advocate, transportation charges payable to, that is 2 and 3 is what is the reverse charge mechanism. Straight away we can answer 6.4. Very, very simple. Whether ITC is available on GST paid by Ashok on taxable value located, if yes, please specify the amount of input tax credit available. This is a very interesting point. Here he is going to some other state in Mumbai, Maharashtra and staying there. So place of supply is location of the service provider, and in case of hotel services, location of immovable property is the place of supply. So supplier is in Mumbai, Maharashtra. Place of supply also is in Mumbai, Maharashtra. So therefore it is an intrastate supply for the hotel. So therefore he will not get credit of any input tax credit because it is for him. He is staying where, if you see the question, he is staying in Kolkata, whereas he is going and staying in Mumbai, Maharashtra. So therefore IGST is not charged by the hotel. CGST and SGST is charged. So therefore no input tax credit will be available. So 4th and 5th, I've already told you the answers. Whereas 1, 2, 3, please try to work out at home and try to tell the solution to me. Right. So with this, we come to the end of today's session. Let me see if there are any queries here. Am I still on mute? Because 1 second, let me mute and unmute myself. Still you are not able to hear? Yeah, so what I was trying to tell is that this question, TCS is for e-commerce operators as of now, but there has been some changes with effect from 1st January 2022, which is not relevant for your examination. So here in this particular situation, make sure what I was trying to tell you is please make sure you somehow clear your examinations in GST in May, because for November 2022, a lot of amendments are there. So these amendments are very critical for you. So therefore, you have to make sure somehow you clear GST or at least to get an exemption. So now audible. Okay, fine. I don't know how it muted myself. So with this, we come to the end of today's session. So we'll be covering on Thursday. On Thursday, what all we'll be covering? We'll be covering the case studies 6, 8, 10, 13, 14, 15, 16. These are the case studies based MCQs we shall be covering in details. So request everyone, whoever is attending the session on Thursday, to kindly revise everything. I hope all of you try to solve the problems and get the right answers. Right. So with this, we come to the end of today's session. I will see you day after tomorrow and continue the revision and continue working out the problems. On Thursday, see you at 6 p.m. Thank you very much. See you. Good night. Take care. Study well. And make sure that all of you are in good health. You just have 2.5 months more for the exams to begin. Thank you very much.